Thank you.
We spoke in April when the Silicon Valley Bank turmoil was still very fresh, and you said, don't be concerned. And a lot of your plays have worked out pretty well since then. Where would you be looking now?
Well, I think it's still a value market out there. You have to look at everybody's looking. Is the market long in the tooth, Kelly? I say no, simply because the S&P, is up 27%. It's really up only 10% if you think about, or actually 7% if you think about taking out 8 stocks. The same way with NASDAQ. It's up 37% for the year, but would only be up 10% approximately if you took out the Microsofts, the Facebooks, the Nvidias, you take the Googles, those 8 companies out, Apple, and you got a normal market. So it's not up as much as people think it is and looking for a collapse. And so I'm still looking at value. I'm looking at companies that just still have low price to sales compared to other companies, meaning less than $1.50 in sales is what we're going to start to look at, to pay anything less than that. And so you can look at a lot of good companies, Academy Sports or Graphic Packaging that people don't know. These are good, high-quality companies with great earnings and dividends that can be raised and going forward. Academy
Sports, by the way, that was one we followed quite closely with Ken Hicks here on the show a number of times. They've got a new CEO now. Some of the longs who have been in that are a little nervous about whether those gains can continue, but you say don't fear.
I don't think so, because you got a price to sales ratio of approximately 7. The dividend's very well covered. They're earning tons of money, $2.50. So, I mean, nothing's really going to change. The leisure market, especially the outdoor leisure market, is going to continue to grow, because that, during the pandemic, really got into the American bloodstream, so that people want to continue to go out and explore the outdoors and fish and hunt and camp. And they're right there with 270, almost 300 stores to capitalize on it, even going forward.
So Graphic Packaging, we don't talk as much about. Some of your other top holdings, Super Micro, MCore. I mean, again, we're in more the mid-cap part of the market. I do see AutoNation on here as well. Do you get concerned at some point about recession, about downturn?
No, I don't think, everybody's been looking now for the last couple of years, Kelly, and talking about a recession, but people just don't realize the number one component of a recession is high unemployment. We do not have that. That number's down to 3.6 or 3.5%, and we can't fill all the jobs. So that's out. The second really big piece of it is economic activity, and economic activity has not slowed down. And if you look at the largest companies out there, they're now committing at least 15% of their cash flow to CapEx expenditure. So they're trying to now exploit their businesses going forward by putting more money into it. And those are the two factors. So I don't see a recession whatsoever.
Well, that said, I mean, a lot of us, or I guess the whole point maybe, although maybe it's a fool's errand, is to try to go, okay, well, I just want to know when the recession's just about to start, and then I'll get out before everybody else does. Or maybe I'll rotate, or, I don't know how you typically kind of play these cycles.
I think, Kelly, it's the old adage, if you buy quality and you hang on to it, you're going to be fine over time. I mean, that's no different in the stock market than it is in marriage. So it's very simple. Buy good quality, hang on to it, and don't worry about it. Sleep at night.
Listen, there's a lot of jokes I could make, but I'm just going to leave that right there. And thank you for your time, Neil, for joining us, and for just to check in, get the pulse on the economy. We appreciate it.